But what did we say about functional budget the last time?
Saying they are the auxiliary or supporting budgets that relate to various functions.
Eric.
Functions of an entity. When put together, we get the master budget.
Okay. All right. So we are saying that the budget prepared by every section within the organization is what we call the functional budget. Every department. So production department will also come with a budget, what they are going to spend for the month or what they are going to spend for the year. They also come with it. Finance department or HR department will also come with their own. Sales and distribution department will also come with their own. That's what we call the functional budget. So if you put all of these things together, we have what you call the master budget. But we are going to look at how to prepare budgets. Like you want to sell 10,000 quantities at, assuming you want to sell 10,000 quantities at 10,000 quantities at okay. I hope you can see the sheet. You want to sell 10,000 units. You want to sell 10,000 units at 20 cedis. 10,000 units at 20 cedis. How much are you going to receive from the sale?
200,000.
200,000, isn't it? So that is gotten as 10,000 times what? 20 cedis. Okay. So if that is a budget, the budget is that you want to sell 10,000 units at the end of the month. At what price? 20 cedis, isn't it? So we can say that this particular department can prepare what you call sales budget. If they are preparing the sales budget, they are going to have the sales. Then we have the sales, we have units. And the unit is how much?
10,000.
10,000. Then the price is what?
20,000.
20 cedis. Then if they multiply, they have what?
200,000.
That will be 20,000, right?
200,000.
Now 10,000 times 20 is okay, 200,000. Exactly. Okay, so this can be called sales budget for the first month because this is what they want to what they want to sell at this price. So this is a sales budget. Very simple. So the sales budget is what unit are you budgeting to sell at what price? What is the total amount that you want to receive? This is a sales budget in value. So sometimes the question can be prepare a sales budget in units or sales budget in value. If they are talking about units, they're just talking about what is the budgeted unit that you want to produce or you want to sell for this particular period. That is sales budget at unit level. So if the company is saying that month one, they will sell 20,000 units. Month two, they will sell 30,000 units. Month four, okay, three, they are going to sell 45,000 units. If they say you should prepare sales budget at unit level, the only thing is just a sales budget. Then you arrange the months. Month one is what? 20,000 units. Month two is what? 30,000 units. Month three is what? 45,000 units. But the question says prepare sales budget in value. In value means you are talking about the total amount that you are going to get from selling the units. So if one unit is 10 cedis, month one, how much are we getting? If one unit is 10 cedis, what will be the total sales for the 91?
200,000.
200,000. That means we multiply everything by 10, isn't it? All right, 200,000. 10.
It's still 300,000.
Sorry. 300,000. And this will be
450,000.
Okay. 450,000. So this is sales budget at unit level and also in value. Sales budget is the simplest budget to ever you can prepare. It's the easiest budget. It's the easiest budget, and it's very also crucial for other budgets. So if they say sales budget, they can say at unit level. If they say sales budget at unit level, the question is how many units is the sales department budgeting to sell for month one or year one? Just go and pick that particular unit. That is the sales budget at unit level for that particular year or month. But if they say sales budget in value, it means that what will be the total amount that they are going to receive from the sale. So you just take the unit for that particular month, then you come and multiply it by selling price per each unit. Are you okay? That is sales budget. That is sales budget. The next budget that you can think about is before you sell, what are you going to do? Before you can sell, what are you going to do? Let's assume that you need to produce. You need to produce. So the first thing is for you to sell, you need to produce. So you have to have a production budget. How many units are you planning to produce? You need to produce before you sell. We are not, for budget, we don't think that you are a retailing business. We assume that you are manufacturing business, where you are going to manufacture the goods yourself before you sell, not that you go and buy from someone and sell. So the first thing that you have to do is that you have to produce before you sell. No, Kathy, I'm not solving any question.
No.
I'm just doing. Kathy, are you okay? We are not solving any question. Kathy.
Yes, sir.
We are not solving any question.
So please, which one are you looking at?
We are looking at
budget. Just an example of something that you are doing.
Yes, we are doing functional budget, and I'm talking about the first budget that you can prepare, which is sales budget.
Okay.
Are you okay now?
Yes, please.
Do you know what we call sales budget?
No, please. So I'll just follow up. I'll just follow and then maybe I'll get it.
Okay, you just have to follow up. And we are done with the sales budget, so you follow up. Okay. We are saying that we assume that you are not a retailing company or a retailing business where you just go and buy and sell. The assumption is that you are manufacturing business. You produce and sell your own products. Are we okay there? So before you think about selling, you first have to produce. So the next budget that you have to think about is production budget. Production budget. But you can only produce if you know the quantity that you want to sell. So production budget depends on sales budget. If you don't know the quantity that you want to sell, you won't know the quantity that you have to produce. Are you okay there? So always production budget depends on sales budget. If you want to sell 100,000 units, it means that you have to produce 100,000 units, all things being equal, isn't it? Are we okay there? Okay. So production budget depends on sales budget. So assuming that we want to sell these units, we want to sell 200,000 units, we want to sell 20,000 units, 30,000 units, 45,000 units. If you want to produce and sell all, there will not be any closing stock, any opening stock. How many quantity do we have to produce? How many units do we have to produce?
95,000 units.
No, let's do it for each month, not total. How many units do you have to produce for the first month?
20,000.
You produce all and sell all. This one will also be what?
30,000.
30,000. Okay. And this will also be what? 40,000. For production budget, we don't multiply by anything. We just look at the quantity level. We just prepare production budget based on the units level. Okay. Assuming you want to produce, and at the end of the day, every month we are going to have, okay, let me put it like this. We want to produce so that, assuming you want to produce so that at the end of every month, we are going to have closing stock. We are going to have a closing stock. So month one, there will be a closing stock of 15,000. Month two, there will be a closing stock of 10,000. Month three, there will be a closing stock of 5,000. If I say closing stock, do you understand? If I say closing stock,
Yes, that is production in excess of sales.
okay, so that means we want to produce after selling them, we have some left again. That is the closing stock that I'm saying. So how many quantity are we selling?
20, 30, and 45.
Okay, but we are saying that after selling these 20,000, we should still have how many quantity left for
15,
15,000. So what should have been the total production that should have been done for month?
35,000.
That would have been what?
35,000.
35,000 units. So that if you sell the 20,000, you still have the 15,000 left, isn't it? All right, let's come to month two. We want to sell 30,000. And after selling 30,000, we still have to have 10,000. So how many units do we have to produce?
You produce 35,000.
No, for month two, 30,000. We are,
40,000.
that would be 40,000. We are selling 30.
No, we have closing here, which will be open. You will come and add to this.
No. Let's assume that we are not doing it like that.
So they are independent.
Yes, let's assume that we are not taking the closing from the previous year to the next year.
Okay.
Are you okay? Yeah.
Okay.
Okay. So that would be 40,000, isn't it?
Yeah.
And this will also be what? 50,000.
50,000.
Okay. That is nice. Assuming that at the beginning of year one, we have opening stock of 10,000. Year two, we have opening stock of 5,000.
15,000. Okay.
Let's do it independent first. And this one we have opening stock of what? 7,000. Okay. And how many quantity do you want to sell?
20, 30, and 40.
Okay. By that 20, 30, we want to sell so that there will be 15,000 left. But we have additional quantity that we have already opening stock. We have some units over there, isn't it?
Yeah.
So we want to sell 20,000, but we still have 10,000 already, and we want to sell and still have 15,000 left. How many quantity do you think we have to produce? How many quantity do we think we have to produce?
25,000.
25,000. Did someone also get a 25,000? Is someone also on the 25,000 line? Okay. Joyce, are you there? Is someone also on the 25 line? Kati, are you also on the 25 line?
No, please. So,
Okay. How many quantity do we want to sell? 20,000. Kati, how many quantity do you want to sell? 20,000.
yes, please.
And after selling, we want to have what left? 15,000 left.
Yes, sir.
So if we want to produce, that means we could have produced what, 35,000.
Yes, please.
So that we sell 20 and have 15 left, isn't it?
Yes, sir.
But we already have 10,000. So do you have to produce the 35,000 again?
No, we have to produce 25,000.
Exactly. So that is the issue. Are you okay now?
Yes, please.
Okay.
Thank
But
you.
the easiest way to do this is that assume that the quantity that you are selling is cost of sales. The quantity that you are selling is what? Cost of sales. How do we get cost of sales? It is
We
opening
add-
stock. Okay,
Then we are opening stock, then we add our purchases, then we less our closing stock.
okay. Then we less our closing words.
Stock,
Then we get cost of what?
sales.
Okay, we get cost of sales. Cost of sales. Okay. But this one, the production that we are talking about, how many quantities that we want to produce is the purchases that we are talking about. So the quantity that you
Production units.
okay, the quantity that you want to sell, we assume that is the cost of sales. We assume that is the cost of what? Sales. So if you want to find purchases, what will you do? Purchases will be equal to what? Cost of sales
Less the opening stock.
Stock. And you add closing.
minus the opening stock plus what?
Closing.
Plus closing stock. Are you okay?
Yes, please.
Okay. So this is how we calculate the production. Or you can also do it. If I want to sell 20,000, I have 15,000. So that I'll have 15,000 left. It means that I have to produce 35,000. But I already have 10,000. So I have to produce only 25,000. That is it. But the easiest way to do this is that add the closing stock to the unit that you want to sell. Then you subtract the opening stock from it. Or if you like, you can just use the idea of what? Cost of sales. Cost of sales is equal to opening stock plus purchases minus closing stock. Then you are now looking for the purchases. Purchases must be equal to cost of sales, which is the unit that you want to sell. Then the opening unit, then you add the closing unit to it. Are you okay? Are we all okay there? Okay. Let's come to another situation. Okay. Let's come here. Assuming in the question they give you this, they have given you the quantity that you should sell. They are giving you the quantity that you should sell. Okay. And this one, they have given you closing stock over here too. Closing stock should be 12,000. Okay. And this one too, they have given you closing stock to be 10,000. Okay. All right. So let's look at the unit that you want to sell. The unit that we want to sell is what? Sales units. Let me put it here. Sales unit is 20,000 here, 30,000 here, 45,000 here. All right. So the first production budget, the first month, let's look at the production budget. The first month, what are we going to, how are we going to do it? It will be the unit that we want to sell plus the closing stock minus opening stock, isn't it? Sales units. Am I okay there? Sales unit. We take the sales unit. Then we add closing stock to it. We add closing stock to it. What is the closing stock for your month one? 15,000. Then we subtract what?
Opening stock.
Opening stock. Okay. So this will be closing stock is what? Opening stock is 10,000. So what will be the production? It will be 25,000, isn't it?
Yeah.
Okay. What will happen? What will be the opening stock for production? What will be the sales unit for month two? What is the sales unit for month two? It's 30,000. Okay, 30,000. So you still pick the 30,000. What will be the closing stock? 12,000. Is it 12,000? Closing stock for month two is 12,000. What will be the opening stock? Opening stock will be what? The closing stock for month one will be the
So now it's rolling 15,000.
It will be 15,000. No, the closing stock for month one will become opening stock for month two.
Stock. Exactly. That's the 15,000.
Jocelyn, do you understand now?
Yeah.
Okay. So what will be the unit that we have to produce now?
Sir,
what-
please, how did you get the opening stock negative?
We are subtracting opening stock. That's why I make it negative.
It's already there.
Katia, are you okay?
No, please.
I said I'm subtracting the opening stock from the sales unit plus closing stock. That's why I make it negative.
Okay.
But you understand that your cost of sales is equal to
The 25,000 down, please. What is it?
is the production unit, is the amount of goods that you have to produce.
Okay.
Okay. Are you okay
So
now?
this one will be given to you.
They will give you the sales unit and they also give you information on closing stock and opening stock. Then you have to know that the sales unit is assumed to be cost of sales and the production that they're asking you assumed to be purchases. Then you now write your formula. How do I find cost of sales? Cost of sales is equal to opening stock plus purchases minus closing stock. Now I'm looking for purchases. Then I have to come and add closing stock to the sales unit and subtract the opening stock.
Sir, please let me the sales that they have given you,
Yeah.
and then they'll give you closing stock.
And they'll give you information about opening stock too.
They'll give you. So what about the production unit? That one they will give
They
you.
will
That is
not
what
give you.
you
You
find.
have to
That is what
calculate the
you
production unit.
So the
They-
production unit is what under the cost of sales formula? Is it the purchases?
Yes, is the purchases.
Okay.
And the sales unit is the cost of sales. That is the simplest way you can understand it. But another way of getting it is that you want to produce a particular quantity of goods so that you sell 20,000 and still have 15,000 left, isn't it?
Yes, please.
So you should
Okay.
have produced 35,000
And then you have an opening stock too,
of 10,000. So it means that you have to produce additional 25,000 to the opening stock so that you can sell the 20,000
20,000 and have 15,000. Okay.
left. So that is our simplest way of understanding it. Are you getting it? So that is the production
Yes.
unit. But if you can't get it like this, then use the cost of sales formula. Assume that the sales unit is the cost of sales. The purchases is the production. Are you okay?
Yes, please.
Okay. One thing also you have to know is that the closing stock for 1 month becomes the opening stock for the next month. So over here, the closing stock over here, which is 15,000, will become opening stock for what? The month
Production
two.
too.
The month two. Are you okay? So what will be the production here? How many are we producing? We want to sell 30,000. It will be what?
Still have 12,000.
27,000.
27,000.
Yeah.
Okay, we want to sell 30,000 and still have what? 12,000. It means that all things being equal, we should have produced 42,000. But we have 15,000 in stock.
Okay.
So what we have to produce to add it to the 15,000 so that we can have the 42,000? That is 27,000. Are you okay?
Yes, please. I'm okay.
45,000. What is the closing stock? Closing stock will always be given to you. It's only in the opening stock that you have to be transferring the closing stock for the subsequent month to the current month. Closing stock is 10,000. What will be the opening stock over here?
12,000.
Okay. Katia, are you okay now?
Yes, sir.
Okay. So what will be the quantity that we have to produce?
You did that.
43.
33,000. Or 43?
43,000.
Okay, 43,000. Are we okay with this one? This is how we do production budget. Production budget is dependent on sales. You can't produce when you don't know what you want to sell, what quantity you want to sell. Are you okay? All right.
Sir, please, do you have a note for this?
Who is that?
Have a nice iPhone.
I know it's Abina's iPhone, but I want to know your real name because iPhone is not your sign name.
Abna.
Abina. So you don't want to pay attention so that you go and read the note, or you want to pay attention and go and read the
No,
note?
I just wanted to know, maybe you gave the note and I didn't get it. I just wanted to find out.
Okay, that is why you should ask me, sir. Have you forwarded a note on this one to the platform so that I'll
Okay.
know that not that you want to be here, you won't listen.
And I didn't ask it the right
So
way.
so ask again. Ask again.
Please, have you forwarded the note to the platform?
Yes, please. Have you seen a note on budget and budgetary control?
Yes, please.
It's that particular note there. Are you okay?
Okay,
All right.
thank you.
So production budget depends on what? Sales budget, isn't it? Okay. If you want to go and buy the material to produce, what do you have to know first before you know the quantity of the material you are going to buy?
Material usage per unit.
You have to know the number of units that you want to produce before you know the quantity that you are going, the material that you are going to buy, isn't it?
Yeah.
So material budget also depends on production what? Budget. So if you want to produce 10 bags of cement, before you decide to go and buy maybe the raw materials that you need for the cement, you first have to ask yourself, how many bags of cement do I have to produce? It is the bag of cement that you want to produce that will tell you how many quantities of maybe the flour or something that you have to go and buy. So material budget also depends on production budget. So the question will also give you the material usage and the cost per each material. So the question can say that, okay, one unit of the product that you are producing uses 2 kilograms per unit. The material usage is 2 kilograms per unit. 2 kilograms per unit. So if you want to know the total material that you are going to buy for the first month, how many materials are you going to buy? How many kilograms of material are you going to buy? You are producing 25,000 units. And one unit is
50,000.
50,000
okay, so let's look at direct material usage budget. So what you have is that you have your production unit. It is a production unit that will tell you what to buy. Production units. So production unit for all of them is what? The first one is 25,000, isn't it? The second one is 27,000. Then this one is 43. And the question is telling you that one unit uses how many kilograms? 2 kilograms. So how many kilograms will 25,000 units use?
50,000.
Okay, so usage. You put the usage here. Then you put multiply by 2, multiply by 2, multiply by 2. Are you okay? This is all about material usage. So you buy 50,000, isn't it? And you buy 54,000. Are you okay?
Yeah.
And you buy 86.
86,000.
Yeah.
Okay. If one material costs 3 cedis, how much are you going to pay for the material in 1 month? 3 cedis. How much are you paying for 1 month? The first month, how much are you paying?
450,000.
How did you get the 450,000?
3 by 50,000 kilograms.
Okay, it means that we are going to buy 50,000 kilograms, but 1 kilogram is 3 cedi. So how much will be the 50,000 kilogram? Are we okay? So
Yeah.
direct material budget in value. This is in value. Or sometimes they can say direct material purchase budget. Direct material purchase budget. But if they say usage, just use the usage, how many kilograms or how many, anything that they are saying, just use it to multiply the production, your production for each month, how much you want to produce, use that to multiply it. But if you are looking for direct material purchase budget, it means that how much units of raw material are you buying? Then you multiply by the cost. So usage is what? Material usage is what? First month is 50,000.
150.
The usage is 50,000, isn't it?
Yeah.
The second month is what? 54,000. Then this one is what? 86,000. Their price is what?
3
One unit is 3 cedi. 1 unit is 3 cedi. So this will give us 150,000, isn't it?
Yes.
And this will give us how much?
162,000.
162,000.
258,000.
25,000.
Do you have anyone here who is not following what you are doing? So that I will take it again.
Say me the sales, I didn't get it clearly. Even though I used the cost of sales formula, but the other one that you were saying, I didn't get the explanation well.
Okay, the other one that I'm saying is that just assume that there is no opening stock. There is no opening stock. If there is no opening stock, you want to sell what? 20,000 units and still have 15,000 units left, isn't it?
Yes.
So all things being equal, you should have produced how many units?
35.
35,000. But you now have 10,000 in stock. So how many units are you going to produce?
25.
25,000. So you go to the second month to you do the same thing. You want to sell 30,000 and you have 12,000 remain. So in all things being equal, you should have produced 42,000, isn't it?
Yes.
But you already have 15,000 in stock. So how much quantity do you have to produce in addition to the 15,000 so that you can sell the 30 and still have the 12 remaining? That would be 27,000. Then you come to the next one to the same explanation. Are you okay?
Okay.
But if you come to the production, after the production unit, then the question says that 1 unit uses 2 kilograms of maybe tomatoes or something. I don't know what you are producing, but they are saying that 1 unit uses 2 kilograms of tomatoes. How many units do you want to produce in month 1? How many units do you want to produce in month 1?
So please, the question again.
If you want to produce this, you are going to use raw material, isn't it?
Yes.
And the question says that 1 unit of what you are producing uses 2 kilograms of tomatoes.
Okay.
But in month 1, how many units do you want to produce?
25,000.
So if 1 unit is using 2 kilograms, how many kilograms will
50,000.
it will be 50,000? Then you get it like that. Are you okay?
Yes.
Okay. Then you come to the next one, so you multiply by the 2 units, the 2 kilograms. Then you have all these 6. Okay. That means if you are going to buy 50 kilograms of tomatoes, isn't it?
Yes.
And they are telling you that 1 kilogram is 3 cedis. So how much are you going to give to the person that you are buying from?
150,000.
That is the material purchased. So you buying is the material purchase. So you can see that this is what we have gotten, isn't it?
Yes.
Okay. This is Prince-La. This is budget and budgetary control. Budget and budgetary control. Okay. And we are looking at functional budgets. Are we okay up to this level? Are we okay up to this level? Are we okay up to this level? Can I move on? Josh, can I move on?
Yes, please.
Okay. Firma, you just joined, so don't worry. Baba, can I move on?
Yes, please.
Richard, can I move on?
Oh, yes.
Kathy, can I move on? She's not there.
I'm here.
Can I move on?
Yes, please.
Okay. If you want to produce, is it only direct material that you are going to use, or you use different things?
You use other things.
What is one of those other things?
You need people to help you to produce, or you
Okay.
need machine to help you to produce.
So we have labor. We have labor budgets, direct labor budgets. So direct labor budget can also be labor hours usage and labor hours budget in value. So how many units do we want to produce? How many units do you want to produce? 25,000. If the question says that 1 unit uses 3 hours.
25,000.
So if the question says that 1 unit uses 3 hours, 1 unit uses 3 hours, how many hours are you going to use on 25,000 units for month 1?
75,000.
75,000. Are you okay? Okay.
Yes.
So production units, all the following budget depends on, only production budget depends on sales budget. Direct labor, material, they all depends on what? Production. Because what you want to produce will tell you how much unit of raw materials that you should go and buy or you should go and purchase. So this is
Sir, please
25.
take it again.
I'm saying that only production budget depends on sales budget, because
Okay.
you can't produce when you don't know what you want to sell or the quantity that you want to sell. After that, direct material purchase and usage depends on the production. It is the quantity that you want to produce that will tell you how many bags of tomatoes you should go and buy. You want to sell kenke, you want to produce kenke. You don't know the quantity of kenke that you want to produce. Can you go to the market and say and decide the number of bags of maize that you can buy?
No.
No, you have to know first before you know the number of bags of maize that you can buy. So production budget help us to prepare the direct material budget and direct labor, and also sometimes variable overhead budgets. Are you okay? Okay. So
Yes,
we are producing 25,000 for first month. How many units for the second month?
27.
27,000.
Yes.
Okay, the last one is what? 43.
43.
Okay. They say 1 unit uses how many hours?
3 hours.
3 hours. So we just multiply by the number of hours. So if 1 unit is using 3 hours, 25,000 units will use how many hours?
75,
75,000. This will be what?
81.
81. They are all in hours. Oh. Can we move on? What will be for the month 3? 43 times 3 is what?
129,000.
129,000. They are all in hours. Are you okay? Okay. If they say the direct labor rate is 3 cedis per hour, how much are you paying? How much will you be paying? If you're using 75,000 hours and 1 hour is 3 cedis, how much are you paying?
225,000.
225,000.
Okay, for month 2 is how much?
243.
243. Month 3 is what?
387.
387. Okay. So this is basically about this, but these are some of the budget that we do. We have the sales budget, production, direct material usage, direct material purchase, labor budget in hours, labor budget in value. Sometimes they can also ask you variable overhead budget. Variable overhead budget is prepared based on labor hours. Based on what? Labor hours. So you just take the 75,000 for month 1, 81,000 for month 2, 129,000. And if 1 hour is a variable overhead per hour is 4 cedis, then you multiply everything by 4 cedis. Are we okay there? So if you are asked to prepare variable overhead budget, the variable overhead is being assumed to vary based on labor hours. So use your labor hours to prepare the budget. So you just use the rates to multiply the labor hours that you have already, which is 75 times 4, 81,000 times 4, 129 times 4. Are you okay? Sometimes we can also prepare fixed budgets. That one is nothing. But the only budget that they can ask you is the production. Sales is easy. You just take the unit, multiply by the selling price. That is all. They can ask you production, direct material purchase, direct material usage, direct labor in hours, and direct labor in value. Let's pick a question. Let's pick about 2 questions. Then we say bye-bye to functional budgets. Then we do cash. We start with cash budgets. Are we okay? Okay. These are all, everything that we are doing here, they have examined all of them before. Flexible budget came once. Functional budget came like 2 times. Cash budget also came like 2 times. So any of them, they can bring any of them. They can bring any of them. Okay, Kathy. Kathy, are you there?
Yes, hold on it. Carol says, sorry.
Yeah, Kat, you always say that we should do what? We should move from simple to complex, isn't it?
Yes.
So we should, I want to solve the 10 first, but let's move on to simple to complex. Or we should solve the 10 first. Let's try the 10 first. It's not difficult. Let's try it. Okay, don't worry. Let's come back to that then. I don't want issue. I don't want issues. I'm not getting the question, so why? Okay, let's look at this question. Okay, let's look at this question. Let's look at question 13. Let's look at question 13. Who is reading for us? Question 13. Who is reading for us? Question 13. Question 13.
Hello.
Yes, question 13.
X Limited manufactures specialist insulating products that are used in both residential and commercial buildings.
Okay.
One of the product W is made using 2 different raw materials and 2 types of labor. The company operates a standard absorption costing system and is now preparing its budget for the next 4 quarters. The following information has been identified for product W. Sales. So we have selling price 22 per unit. And then the sales demand, we have quarter 1, 2250 units. Quarter 2.
You count to the
2000
cost. Leave that one and count to the cost.
Okay, so materials. We have material A, 5 kg per unit at 4 Ghana cedi per kg. Material B, we have 3 kg per unit at 7 cedis per kg.
Okay.
Labor, we have 4 hours per unit at 15 cedis per hour. Semi-skilled, we have 6 hours per unit at 9 per hour.
Okay.
Annual overheads is 280,000.
Okay.
40% of these overheads are fixed and the remainder varies with total labor hours. Fixed overheads are absorbed on a unit basis.
Okay.
Inventory holding policy.
Okay.
Closing inventory of finished goods. 30% of the following quarter's sales demand.
Okay.
Closing inventory of materials. 45% of the following quarter's materials usage.
Okay.
The management team are concerned that X Limited has recently faced increasing competition in the marketplace for product W. As a consequence, there has been issues concerning the availability and the cost of the specialized materials and employees needed to manufacture product W. And there is concern that this might cause problems in the current budget setting process.
Okay.
Required. Prepare the following budget for each quarter for X Limited. I, you have the sales budget in kg and value. II, product budget in units. III, raw material purchase budget in kg and value for material B. IVX Limited has just been informed that material A may be in short supply during the year for which it is preparing budgets. Discuss the impact this will have on budget preparation in other areas of X Limited. V, assuming that the budgeted production of product W was 7,700 units and that the following actual results were incurred for labor and overheads in the year. So actual production, we have 7,250 units.
Okay, this is a flexible
budget.
This is a flexible budget. So let's focus on the functional budget.
Okay.
Okay. Okay. Hey, who is this? Thank you for your voice, for your nice voice. Who is this? Eric, you too, you the warrior. Hey, people worry. Okay, the first question says that we should prepare what? We should prepare sales budget in unit and what? In unit and in value, isn't it?
Yes.
That is the easiest one to prepare, isn't it?
Yes.
Okay. But let's count to. So production budget. Before you prepare the production budget, you have to know which budget. Before you prepare production budget, you have to know what?
You have to know the sales.
You have to know the sales. So even if they don't ask you to prepare sales budget and they ask you to prepare production budget, you have to know that you have to know the quantity that you are going to sell before you make plans for what quantity you should sell or you should produce. Are we okay?
Yes, please.
Okay. So let's count. Let's count the budgets. So how many quarters are there?
4.
Is it 4? Is it you should prepare for only 4 or all? Is it all or for 4? Are we preparing for all? Are we preparing for all? So none of us have the question on the phone.
Please, which question is that? Question what, please?
Question what? Someone should answer. Me, I've forgotten the question number. Question what?
It's question number 13.
Okay.
Thank you.
So let's have the quarters here. How many quarters are we preparing for? All the quarters or?
4.
I think so.
You said 4 for the next 4 quarters.
Okay, no. Prepare the following budget for each quarter for X Limited. So how many quarters are there?
6.
We have 6 quarters.
Okay, so you prepare for all the 6. Are you okay? For each of the quarters. That is what they're saying. Okay, so we count to units, isn't it? How many units are we budgeting to sell for the first quarter? How many units?
2250.
2250. Quarter two is what?
2050.
2050. Quarter three is what?
1650.
1650.
1650. Okay. Quarter four is what?
2050.
2050. Quarter five.
1250.
1250.
Okay. Quarter six is what?
2050.
2050. Okay. This is what they're asking us to do. This is how we do it for kilogram. This is what we want to sell. Are you okay? There's nothing we are going to do again. This is in kilograms. That is what we want to sell. There's nothing to do again. Are you okay? Okay. Hey, are they saying you should prepare the unit, then this one in kilogram?
Yes, they say kg and in unit. And in value.
No, it should be in value and it should be in unit and value, not kg. It should be sales budget in unit and value, not kg, because the kg is for the production. So we are using 5 kg per unit, not the selling. The kg is for raw material, it's in the production process. This is the finished goods, so it should be in units. It should be units and those ones, not kg. Are you okay?
Yes.
So the next question is what? Sales budget in what? In value. It's not sales budget in value.
Yes, please.
So sales budget in value. How do you find the sales budget in value? We just take each unit multiplied by the selling price. Is that not how we do it?
That is it.
Okay. So these are the unit that we want to sell. 1 unit is what? What is the price for 1 unit? Selling price.
220.
Selling price per unit. So we multiply all of them by 220. 220. If you multiply all of them by 220, what will be the price for all? Okay. This is the selling budget in units. Are you okay? All right. The next one is what? The next requirement is what? Sales budget in units is just the unit that you want to sell multiplied by the selling price per each unit. So that means the value is, if you want to sell 250, 1 unit is 2220. What is the total amount that you're going to get from selling the 250 at that price? That is a sales budget in units, in value, sorry. Let's count to the second one is what? What is the second one?
Production budget in units.
Okay, production budget will always be in units. Okay. Who is that? Who is that? Production budget in units. Okay. Okay, let's come here. The first thing you have to ask yourself is that, do you have any information on closing stock? Okay. How many quantity do you want to sell for quarter one? How many quantity do you want to sell for quarter one?
2250.
2250. Okay. Assuming we don't have, assuming we are not going to have, we produce and sell all. How many quantities do you have to produce? Assuming we produce and sell everything, how many units do you have to produce?
2250.
Okay, yes, that is 2250. But let's see whether we have, if there is no unit that will be left, we'll be producing 2250. We'll be producing 250. We'll be producing 1650. So the starting point is that for production budget, you have to know the unit that you are producing. So if you are going to produce and sell everything, it means that your total production will be your total unit produced. But let's come to the question and see. Do you have any information on closing stock?
Yes.
Inventory holding policy, isn't it? Closing inventory of finished goods is 30% of the following quarter's what? Sales demand. So if you want to see closing stock of finished goods, what are you going to do? For the first quarter, what will be the closing stock for the first quarter?
30%.
Of which one? Of which? Of the following quarter?
2050.
20 what? 50. 30% of the following quarters was sales demand. But quarter one, can we have opening stock for quarter one? No, because there was no, okay, quarter one, there will be opening stock for quarter one.
Opening stock.
Yeah, okay, let's assume that there can be opening stock for quarter one, but I'll say that assumption, but I won't make it. We assume that quarter one means that we are starting new year, isn't it? But the 2250 over here was a closing 30% on 2250 was closing stock for the quarter that counts before the quarter one now.
Yes.
Are you getting it? But we are not going to make that assumption.
Assumption.
Yes, it's an assumption that the quarter that counts before the quarter one, the 30% on 2250 was the closing stock for that particular quarter. Therefore, 30% on this must be the opening stock for the current quarter. But we should assume that there was no quarter before the first quarter now. Are you okay?
Okay.
Okay. If there was no quarter before the first quarter now, then opening stock for quarter one will be 0. Are you okay? So what will be the closing stock? What will be the closing stock? Let's find the closing stock for all of them. Closing stock for this one is what? 30% on what? 2050. What is the answer? %30 on 2050 is what?
675.
667 what?
75.
What will be the closing stock for quarter two? Let's find the closing stock for all.
That's okay.
615.
615. It is 30% on 1650, right?
Yeah.
Okay. What will be for quarter three? Let's do it for all.
495.
495.
95.
495. What will be for quarter four?
615.
615. What will be for quarter five?
375.
375. Quarter six, are we going to have closing stock? Are we going to have any closing stock for quarter six?
I don't know.
Yes. Yes.
That would be what?
615.
For quarter six.
615.
Quarter six, so quarter six is supposed to be 30% of quarter seven. We don't have quarter seven, so there won't be any closing stock over here.
No, so let's get it.
The question says that the closing stock is the 30% of the following quarter sales demand. So for quarter six, it's supposed to be 30% of quarter seven. We don't have quarter seven.
So I still don't get it.
You have the question on your phone.
Yes, it says 30% of the following quarters.
Okay, so quarter six, what quarter will follow the quarter six?
Then why is it that quarter one we use the same quarters units to get the quarter one closing stock?
No. How did you get a 675?
Sir, please, the quarter one closing stock, I don't think it's correct.
It should be what?
It should be 615.
615.
Yeah.
And why?
30% on 2050 is what?
No, it is six. Ah, so I was thinking that quarter one's closing stock, that's the 30% of the 225 will be for quarter two.
No.
Then it
Why?
will move.
They say the closing
So
stock
the following means that the next quarter,
month,
or
the next quarter, yeah. So it should be 615. Are you okay?
so what are we having for? Then the first one is
The first one should be 615, isn't it?
yeah. Then we shift it by that.
That to be 495.
Yes.
6. This one will be what? 615. Okay. Then this will be what?
375.
375. Okay. Then this will be what?
615.
615. Then this one there will not be any
Zero,
stock
yeah.
there because there is no quarter 7. But the assumption that I was saying that if you assume that the sales for quarter 1, the 30% on it was the closing stock for the quarter that counts before the quarter 1, then you can have opening stock for quarter 1. But we are not going to make that assumption. We assume that they are starting from fresh, isn't it? Okay. What will be the opening stock for quarter 1? There won't be any opening stock, isn't it?
Zero.
Okay. So what will be the opening stock for quarter 2?
615.
It will be the closing stock for the previous quarter. This will be 49 what?
495.
This will be 61 what? Are we getting while I'm getting a 615 495? The closing
Yes,
stock
sir.
for the previous quarter becomes the opening stock for the current quarter. Okay. This will be 37 what? 5. And this will be what? 61 what? 5. Are you okay? So what will be the production unit now? It is a production. It will be, what will be for the first one? What will be the production for the first one? We want to sell 250 and still have 650 in the stock. So how many are we going to produce?
2865.
2865. Okay. What will happen to this one? This one we just add, it is sales plus closing stock minus opening stock. So do it fast. Let's see.
The second one is 1930.
1930. Okay, let me see. Let me see whether I can use Excel to do that fast. Okay, 1930. So you just check and see whether they are correct.
1770.
Okay. They are correct.
Yes.
Okay. So that is a production now, isn't it? Okay.
Yes.
What is the next question?
Sir, please hold on.
Yeah.
I want to check something, please. Can you go to the Excel sheet, please? So when we produce, okay. So the second year, we want to have 2050.
We want to sell 2050.
2050 plus
495.
a closing stock of 495. Am I right?
Yes.
And we already have 615.
Yes.
Okay, so let me see.
Two over
Are you okay?
there.
Yes, please, I'm okay.
But you should have told me that you're okay so that I'll move on.
Oh, sorry.
You're worrying me. Okay, can we move on? The next question is Wakati. Read the next requirement for me.
Please, hold on, oh, I was sitting. Raw material purchases, budget in kg, and value for material B.
So that means they have two materials, but we are going to do for only material B. But let's do for all the two materials. Are you okay? Okay. Let's do for all of them. Let's do for all of them. Can we do it for all of them? Okay. So raw material purchase. How many for material B? How many quantity are they using?
3 kg per unit.
So let's come to raw material budget. In unit is purchases. So if you know how to do for B, you can do for A, isn't it?
Yes, please.
Raw material usage budget. Raw material usage budget. So we are doing it for the 6 quarters. Okay. We are doing that one for material B, right? Okay. Material B. Material B. Okay. How many quantities are we producing? So the first thing that will come is
2865.
production. 2865.
65.
Let me just copy all of this. Right. Because his formula 2865. 2865. This one is what?
1930.
Okay.
1770.
1770.
1810.
1830. Okay, 14.
1810. 1810.
Okay. 1810. 14 was
35.
5. So what is the usage per unit?
5 kg.
Yes. Usage per unit is what?
5 kg.
Yeah. It's 5 kg per hour, isn't it?
Yeah.
So what will be the usage?
In value.
Yes, in value, in units.
No, we multiply it by the production.
Okay, so this will give us this multiplied by this, isn't it?
Yes, sir.
Okay. So this is the usage. Okay. All things being equal, this is what we should have go and buy, isn't it? Okay. This is what we
For
should go
material.
for material, isn't it? Okay. But let's come here. What are they saying? What are they saying?
The amount of each kg.
Okay. But they have something about raw material. Closing inventory of raw materials. What are they saying?
45% of the following quarters.
Okay. So
Material.
we are going to buy some so that we use some and some will be left, isn't it? So we are going
Yes,
to use the idea of the production, how we do the production, closing and opening. At the same time, we are going to do over here. Okay. How many units are we using? Let's talk about material purchase budget. Material purchase budget.
For the first quarter.
Yes, let me write material purchase budget over here first. Yeah. Purchase. So for raw material too, they can have opening stock and closing stock too. I've forgotten to say something about that. But don't worry, we'll show it over here. But it's the same as the production one. It's the same as the production one. So The usage is what? Usage is what? Total usage is what? For material. For the first quarter is
14,325.
14,325, isn't it? 9650. 885 what? 0. 950. 7450. 7175. So what is the question saying now? So let's come to closing
It's
stock.
40%.
Closing stock now. So 40% of the following what?
Quarters material usage.
Okay, so what are the usage now? The usage is the one that we have at the top, isn't it? So what will be the closing stock for the first quarter?
40% of 9650.
And that will give you what?
$3860.
3860.
Someone
Okay.
should confirm, please.
3860. So we are 14 here. So approximately we are 13. I'm the one doing everything. So what will
The
be the
next one is 3540.
3540. Okay. The next one is what?
3620.
3620.
2980.
2980. This one will be what?
Please hold on. 2870.
2870. Last year, you going to have some?
0.
Okay, 0. So what will be the, we will surely have closing stock, isn't it?
This is the closing stock.
Okay. Closing stock. Okay, we are going to have opening stock. So we have opening stock, isn't it? We will surely have opening stock, isn't it?
Yes, sir.
Okay. So first year, there is no opening stock. Are we okay? Second year, what will be the opening stock?
Sir, please, I have an input to make.
Okay.
The closing stocks for the first quarter.
Okay.
I am getting a different answer.
What did you
That's
do
why I said
before?
someone should confirm.
What did
Yes.
you do? What did you do? 45%. Oh,
Of
it's
the following,
45%.
yes, 45% of the 9650.
So that will give you what?
Then everything will be wrong. Oh. I use
Yeah.
40%. Sorry.
Okay.
I am having 4343.
43.
43.
Okay.
43.
Okay.
I
The
think
next
that the
one.
rest will be wrong. I use 40%. Sorry.
Yes, I realize that you're using 40. Okay, the next one is what? So, Kathy, use 45 for some of them for me now.
Okay.
So the next one will be 3983.
3983.
And 4073.
4073.
Are you approximating the figures?
Yeah,
Yes.
if they are decimal, you approximate to the nearest unit.
Okay. Okay.
So it should have been 40 so that we
And
can get
3353.
absolute figures. 7.
3353.
Is it 7 or
Yes.
7?
33 is 33, please. 33.
3353.
53. Yes.
Okay.
The next one is 3229. Am I right?
Yes.
Is what?
3229.
Kathy, mention
3229.
3229.
3229. Okay.
Yeah, sorry. I was
Okay.
using 40%.
We should have used 40 so that we get absolute figures. But don't worry. If you are getting decimal, approximate to the nearest unit. What will be the opening stock for quarter 1? 0, isn't it?
Yes.
Yes.
Quarter 2 is what?
43.
Okay. This will be 3983. 4073. Who is that? 3353. Are we okay?
Yes,
And
yes.
3229. Okay. So what are we going to, it's the same thing. We want to use 143, but we still, after using it, we still have to have 4343 installed. It means that we should buy something so that after using this one, we still have the 4343, isn't it? So we
Yes,
add the
Yes.
two. So add the two.
you get 18668.
18668.
668.
So it's the same principle like how we do it for production. So you add usage to the closing stock, then you subtract the opening stock.
Okay.
So what are you getting? I'll just use Excel so that you confirm it.
9290, yeah.
Okay. Okay. So these are the material that you are going to purchase. These are the quantity of material you have to purchase, isn't it? What is the price of one?
547.
What is the price of one?
Sir,
It's-
please, so I have a question.
Okay.
Sorry for
Don't worry.
the interruption.
Don't worry.
Are we limiting ourselves to only material A?
It's the same thing that we do for material. If you are doing the one that we are doing for material, is it material A or B?
I think this one is A, but your level is B.
The question is B. Oh,
Yeah,
No,
but
what
you
we are
said you
using here.
do for the two, or
let's do for,
So
okay,
so
is,
this one is
this is for A, isn't it?
yes, it's supposed to
Okay.
be A.
So it's the same thing you do for B2. You see the usage per unit over here, you multiply all of them by 3333.
The raw material usage B, budget B.
Yeah, it's
You
333,
can
isn't
change
it?
it to A.
So let me change this one to A. Okay,
Yes.
okay, okay. But this one too, if you want to do the B, you just usage per unit to be 3333 over here. And the
Yes.
same thing that you are going to use 45 times the usage, the same thing. Okay.
Okay,
So
thank you.
These are the units that we have to purchase, isn't it?
Yes.
One unit is costing us how much?
4
4
cities.
Cost per unit is what?
4.
4 cities, isn't it?
Yes.
So you use 4 cities to multiply everything over here. And that will give us, okay, I will just do it, then you use Excel to confirm. So this times 4. Joyce, are you there? Sorry. Joyce, are you there or you are off? So this is material purchasing value. Okay. I didn't say something about labor. Okay.
Yeah, the question you said something about.
But this one, he didn't say we should prepare a labor budget, isn't it?
Mm.
Should we try the labor budget for one of them? The labor they have semi and this one. So let's try the skilled. They have skilled and semi-skilled. Should we try the skilled?
Okay.
Okay, let's try the labor budget in hours. So let's try the labor budget for skilled labor. Labor hour budget. Our budget for skilled labor. I hope so far so good. We are okay with the budget, isn't it? How to go about it. Right. It's very important. So we have the core test. Let me just pick the core test from this place. Also, so for you to know the number of labor hours you are going to use, you have to know the quantity that you produce first, isn't it? Is that not it?
Yes, please.
That is it.
So you have to come and pick the production quantity. So at the end of the day, you want to produce, how many quantity do you want to produce for quarter one?
2250.
Quarter one is not sales, so it's usage. It's
Yeah.
product
Down.
2865.
2865. Okay. 2865. 2865. Okay. The second one is, okay, let me go there so that someone will write it down. Production is this one. 1930. Okay, let me just copy this. Okay, are we okay now? Okay, how many hours per unit? Labor, skilled labor, how many hours are they using per unit?
4 hours per unit.
So what will be the total hours that they are going to use?
We multiply by the
And multiply. So that will be the total hours by 4, isn't it?
Yes, sir.
Or by 4. So this will give us this times this. These are all in hours. So this is labor hours budgets that we are doing. And they are all in hours. They are all in hours. Okay. So it means that for quarter one, how many hours are we using? 11460, isn't it?
Yes.
And how much are we paying per hour?
We are paying 15 cedis per hour.
15 cedis. So we come to labor budgets in value. Labor budgets in value. Labor budgets. Labor budgets in what? Value. In value for skilled labor. For skilled labor. Skilled labor. So the first thing that you have to do is what is the total hours that they are going to use on the production process? What is the total hours that they are going to use? So the total hours is 1144, isn't it? 460. This is 7720. 780. 7440. 7240.
So the total
59.
times the rate.
Is it? 5740. So what will happen now? We multiply by the rate, isn't it?
Yes, sir.
Rate per hour, which is the rate per hour is what? 15
15
cedis.
cedis.
15 cedis.
So we multiply by 15. 15. Yeah, someone is writing a test to me. It's still inside.
Ebe.
What should? Sir, there is one I'm going back. Okay. Okay. So this is all. Are we okay? Are we okay? Okay. I hope you're okay. We can move on now. Richard, Kathy, Princeland, are we okay? Joycelyn?
Yes, sir.
Okay. So we can move on to another question. So let me save this one. This is question 13, right? Is it question
Yes.
13? So let me save it question
Yes.
13. Let's go to another question, then we stop on the functional budget.
Sir, please, could you throw more light on the IV?
Which is
Yeah, X Limited has just been informed that material A may be in short supply during the year for which it is preparing budget.
okay.
The impact this will have on budget preparation and other areas of X Limited.
We call something budget limiting factor. So the shortage of the products, the what of the material A will not help us to achieve our sales targets, because we need the target is that we want to sell. What is the target for the sales? What is the target for the sales? Is 2250, 2050. And these ones, we need a certain quantity of material A to achieve that, isn't it? So if the material
Yes.
A is not there, it means that we can't be able to produce up to the quantity that we want to sell. So our sales is going to reduce because we don't have the quantity. And even if you want to find an alternative quantity or an alternative material for it, it must come at a higher price, which is also a cost to us. Are you okay? So it's the effect is that the sales budget might reduce, because if you want to sell 2250, it means that we need certain amount or certain quantity of material A to achieve that. If we can't get that, it means that we can't produce up to what we want to sell. Are we okay?
Okay.
And maybe it can also happen that we have already gotten the people for the job. And since the material is not there, some people will just be there idle. They are not doing anything, and we pay them money. Are you okay? And also, if the company wants to source for alternative, or they want to use an alternative source, that alternative source might be an expensive to them. And at the end of the day, they are going to get a higher cost, which will reduce the profit of the company. Okay. So the only thing is, the effect that it will have is that it will reduce the sales budget. And if the sales budget is reduced, our production will also reduce. Okay. So this is what we call budget, limiting budget factor. Some of the things that will help a company not to achieve its budget, and this is one of them. The shortage of the material A is going to affect our production and is going to reduce our sales budget. And if the company wants to source for another alternative means, this might come at a cost, which will increase our material purchase cost, and that will have effect on our profits. If direct costs are high, it means our contribution will be very low, isn't it? All right, so that is what they are trying to say. That's what they are trying to say. All right, me, I thought you would say that I should talk about the V. I should talk about the V. This is a question that I reserved that even if we are going to do intervention, I'll solve it with you, so don't worry.
Thank you, sir.
Okay.
So why not doing the V?
The V is a flexible budget, which we did yesterday.
So no, you see, this is a question, a complete question. Okay, so how do we get the question? Like, how do you solve the flexible budget in a question like this?
Okay.
What we did was a question on the flexible budget on it, or we don't need any information in the A.
You need
you
need information on the A.
So why don't we solve a complete question like this that has both the flexible and function?
Okay, that is very nice question. That is a very nice question. That is a very nice question. But what they are asking us over here, they are asking us overheads. They are asking us variable overheads. We didn't prepare budget for variable overheads. We didn't prepare budget for what? Fixed overheads. We prepare budget for what? Skilled labor, isn't it? We prepare budget for skilled labor. We didn't prepare budget for unskilled labor. Okay, so the question is, let me just move on fast. The question is, assuming that the budgeted production of product Y was 7,700 units and that the following actual results were incurred for labor and overheads in the year. Actual production is what? 7250, isn't it? Actual overheads, variable is 125, fixed is 105,000. Actual labor cost is what? Skilled is 56750. Semi-skilled is 332,400. Are you okay there? Are we okay?
Yes, sir.
Okay. Okay, let's come here. Okay, let's come. So we are preparing the budget. They say prepare the fixed budget for only the 4 costs alone. So variable, fixed, skill, serving. Can we move on? Okay, let's come here. Let's come here. So let's come to this question. What is a semi-skilled? Semi-skilled is what? Semi-skilled is what? 4 hours per unit, isn't it? And 15 cedis per.
Semi-skilled is 6 hours.
Okay,
Sorry.
skilled is 4 hours per unit at what? 15 cedis, isn't it?
Yeah,
So what is the price? What is the price per unit?
15 cedis.
15.
50. What is the price per unit? We are using 4 hours per unit, and 1 hour is 15 cedis. So how many? What will be the cost per unit?
That's 4 times 15.
That will give us how much?
60.
60
60.
cedis, isn't it?
Yeah.
Okay.
Yes.
Let's come here. 6 hours per unit at 9 cedi. What will be the cost per unit?
54.
64, isn't it?
54.
Okay, 54. Let's come here. The question says that, assuming that the budgeted production of product Y was 7,200 units. So what will be the fixed budget for? What will be the fixed budget for semi-skilled, skilled and semi-skilled? The fixed budget would have been, okay, let's do skilled and semi-skilled. Skilled and semi-skilled. Skilled and semi-skilled. So what is the cost per unit? What is the number of units that we are budgeting for? Is 7,700, isn't it?
Mm.
What is the cost per unit? What is the cost per unit? One is 45, isn't it? Semi-skilled is 45 or 60. Is it 60 or 45?
Scale is 60,
54.
and then semi-scale 54.
60.
4 times 15 is 60, isn't it?
Yes.
Yeah.
That's
Okay.
54.
That is 60. And this will be what? 54. What will be
Yes,
the total cost now?
Cost is 2,000.
So that is the budgeted what? Cost for labor that we budgeted for. Because the question says that assume that the budgeted production level was on what?
Killed it.
777.
462,000.
It's 400 and what? Skilled is what? 462. Okay. So the question says that assume that the budgeted production was 7,700, isn't it? We budgeted that we are spending 60 cedis. We budgeted that we are spending 60 cedis on 1 unit, isn't it?
Mm-hmm.
So what would have been the budgeted cost for the total budgeted cost for the skill labor? It should have been the number of units that we are budgeting for times the cost per unit, isn't it?
Mm-hmm.
So these are the budgeted costs that now we're supposed to have. Let's come to the overhead. Let's come to the overhead. This is the fixed cost now. Let's come to the overheads. The annual overheads. What are they saying about the annual overheads? 40% of these overheads are fixed And the remainder varies with total labor hours. Fixed overheads are absorbed on a unit basis. Fixed overhead are absorbed on a unit basis. So 40 of these overheads are fixed, and the remainder varies with total labor hours. Total labor hours. What is the total labor hours over here? What is the total labor hours over here?
7,007.
Total labor hours is 10 hours, isn't it?
Yes.
4 hours for skilled,
Skilled.
six
Or we
hours
put it
for.
together.
Yes, that is they are all labor. So that will be 10 hours.
You put it
over.
together.
You put it together. That will be what?
1 hour.
10 hours.
10 hours. 10 hours per unit. That will be 10
Right,
hours.
very good.
Okay. Okay. Let's come here. Let's come here. What will be the labor hours over here? What will be the total labor? What will be the
The
actual labor
actual.
hour? Yeah. What will be the,
24.25.
how did you get a 24.25?
But you said we should add it.
No,
Six-
this is
no,
No,
this is
this one is
also.
in Ghana cedis. So
This is Ghana cedis. So if you want to
okay,
get it, you have to
fair.
divide.
You
have to-
divide, yes.
Yes. Divide, let's see.
The first one is 35,000.
The first one is what?
35,000 skilled.
35,000 hours.
Okay, for skilled. Mm-hmm.
Yes.
And semi-skilled is what?
It's 41,550 hours.
Add the two and see what figure you're going to have.
Seven six five five zero. Please, someone should confirm.
7655.
Zero. Someone
many-
should confirm.
How many five?
2 5s.
Okay. 76550. Okay, someone also should also confirm. Let's move on.
it's correct. 76550.
Okay, let's count to this one too. Let's count to the labor hours over here. Let's count to the this one we have over here. This is 10 hours, isn't it? 10 hours per what?
10 hours.
Per unit.
Yes.
How many units did we budgeted that we want to produce?
7,700.
So what will be the total hours now?
So should it be the 10 times the 7,700?
You divide.
No, you multiply.
So 77,000.
77,000.
Linus, please take that place again. I'm not getting it.
It's 10 hours per unit. One unit is 10 hours, and you are producing 7,700 units. So how many hours are you going to use? It is 10 times.
77,000.
It is 10 times the number of hours. You can only divide when it is cost. When it is cost. This one unit is 4 hours. So 7,700 units will be how many hours? You will just multiply. Katia, are you okay?
Yes, please.
Okay. I mean, she has to be. She has to be okay by force.
What we calculated, please. Oh, the 7655 hours.
Okay.
What is that one for?
For actual, that was the actual hours used. I mean,
Yeah.
that was for actual performance, isn't it?
Yes.
So we want to know the budgeted hours that we have. So the one that we are doing right now is the budgeted hours.
So now let's go up to how we get the budgeted.
Okay. Budgeted is we are producing 7,700 units, isn't it? And
Yes, please.
The question says that. The question
Okay. I'm okay.
Okay, you're okay now?
Yeah, so we multiply the 7,000,
by the 10 hours.
700 by the, yes, I'm
Okay.
okay.
So budgeted is what? 77,000 hours, isn't it?
Yeah,
What is the variable overhead? What is the variable overhead in the question there?
the 40% thing that they are talking about.
40% of what?
If you please,
Overhead cost.
Which is what?
40% is fixed.
Of
40%
One
of these overhead are fixed, and the remainder,
okay. So 60% will be what?
168,000.
168,000. That is the budgeted variable overhead, isn't it?
Yes.
168,000. Okay. Let's come to the semi-skilled. What was the fees?
please hold on. How did it? Linus, please.
Yeah,
The 40% is fixed. The 60% left to be the
the variable.
Variable.
variable. Yeah.
So
Then we
60% on
multiply
280. On 280. The annual overhead cost is given at the top there. This is the annual overhead cost. Annual overhead, this one. Katia, are you okay now?
Yes, please. I'm okay.
Okay, let me prepare the flexible budget now. I have my workings now. Flexible budget. Flexible budget for actual performance. So the first one will be actual unit, isn't it? Or let's say output. What is the output level? Input plus there.
Actual is 7250.
Let me put a variance here. Okay. Actual is 7250. 7250 units. This will also be 7250 units. There won't be any variance, isn't it? So the next
Yes.
thing will be the currency sign because we are going to bring cost. Okay. The cost which the first cost is what?
Skilled.
Skilled labor.
Is variable. The first is overhead, which is variable. Okay.
Okay.
Variable. That is actual. So we just come and put the actual under the actual. Actual, we don't do anything. Okay. Actual is 185.
Oh, okay.
So we are
Yes, I
comparing. We are comparing what we should have incurred to the actual cost that we have incurred. Okay. For variable, what was the cost that we budgeted for?
160.
Okay. They say this particular cost vary with labor hours, isn't it?
Yes.
What was the budgeted labor hours that we have?
10.
7655.
No, that is the actual. That is the actual labor hours.
So 77,000.
Okay.
37.
So for us to know the cost that we should have incurred for the 76550, it is the actual over the budgeted times the budgeted cost, isn't it?
And Linus, please,
Yeah.
sorry. With the variables, even when you are told or not, we should always use the labor hours.
Yes, we always use labor hours for the variable.
Okay.
Are you okay?
Yes, please.
Okay. So let's move on. So it will be actual over the budgeted times the budgeted overhead, isn't it? So 76550 over 77,000 times 168,000. What is the answer there? What is the answer? The
Please take it
actual over is the same thing that we did yesterday. The actual over budgeted times the budgeted cost.
Oh, okay.
So the actual is 76550 divided by the actual, divided by the budgeted, which is 77, multiplied by the 168. What are we having?
167018.
Okay. 1670.
18.
Okay.
701
1670.
1E.
Okay, 167018.
Please, any of you can confirm me.
It's correct.
1670.
18.
Okay, 16. Okay. What is happening? Is he a favorable or adverse?
Adverse.
Okay, let's come to the overhead first. Let's come to the fixed one. The fixed overhead. Let me put the overhead here. The fixed is what? What is the actual?
Yes. Please, I've forgotten something. Why are we saying it's adverse?
If the actual is higher than the budgeted, it means that you spent more. So it's adverse. But if
Please.
you should have spent 167, but you end up spending 185. That means you spend more. It is going against you. So if it is going against you, we say it is adverse. If it is going in your favor, we say it is favorable.
You said we should have spent which one?
We should have spent 167,018, but we end up spending 185.
Please hold on. Okay. I'm okay.
Okay. What is the fixed overhead? What is the fixed overhead cost?
112,000.
Okay, they say fixed overhead are up on a unit basis. Forget about that one. Whether they are using whatever, if the output is high or they will still incur the same thing unless the person see you have exceeded that limit. So 40% on 280,000 is what?
112,000.
112,000. Is it adverse or favorable?
Favorable.
We should have spent 112,000, but we end up spending what? 105,000. It means that we have saved some cost, isn't it?
Yeah.
Okay. So let's come to labor. Let's come to skilled.
But 9 hours. Why is it that the fixed one we are comparing these two?
Fixed overhead doesn't vary with output level. If they rent a room to you for 500 cedis, if 5 of you want to stay in that room, it is still 500 cedis. If no one is staying there too, it's still 500 cedis. Are you okay? So don't go there and be doing anything to the fixed overhead. It doesn't vary with the output level. Whether you produce or not, you still incur the same cost. Kati, can I move on?
Yes, please.
Okay. The skilled, what is the actual cost? What is the actual cost for the skilled? The actual cost is 56. This one. What was the budgeted cost for the skilled? What was the budgeted cost for the skilled? It was 46. Budgeted cost for the skilled is what? 46,200. 46,2,000. It's 462,000, isn't it? The budgeted cost for the skilled labor is what? The budgeted cost for the skilled labor is how much?
46200.
That is for how many units?
There's 77,000 units.
7,700 units, isn't it?
Yes.
But what unit did we produce?
The actual, let me see.
The actual unit is now 7250, isn't it? The actual unit is what? 7250. The actual unit is what? 7250.
Yes.
So what should have been the cost that we should have incurred in respect of skilled labor for the 7250?
7250 by 60.
Okay, that is also a nice one.
435.
That is also a nice one. Or 7250 divided by 7700 times 462. Okay, they're all the same thing. Let's move on. The skilled labor is what?
435,000.
435,000.
Please confirm.
Unskilled is what?
$391,500. Please confirm.
391.
500.
500. What is the actual for the two? What is the actual for this one? This is so let's come here. This so if it is negative, it is adverse. If it is positive, it is favorable.
Yeah, I'm confused
Confused about what?
about how we got the 391,500 and the 322.
What is the cost per unit for skilled labor?
460,000.
Cost per unit, not total cost.
Cost per unit.
Yeah,
Is it a 7,700?
that is units. What is the cost per unit for skilled labor?
60.
It's 60. That if you are producing one unit 60. How many units did you produce? What was the actual unit produced?
That's why it's 7250.
So what will be the cost? What will be the skilled labor cost for 7250 if we budgeted to spend 60 Ghana for one unit? Yours, are you okay now?
Yes, please, I am.
The second one, you are okay, isn't it?
Yes.
Okay, that's all. Let's pick another question on the budget. Okay, let's try let's try this question. Question 14.
Mercury Company.
I'm sure. Okay, question 14. Yeah, 14. Which reading? Which reading? Kathy, are you okay? Kathy, are you okay? Someone say but who said
I'm the one.
Okay. I don't want to talk plenty. That's why I didn't say anything. Which reading? Friends, read for us.
So I'm by the roadside, the noise.
Okay.
Okay. My voice is not nice, so you take it like that.
I'm not saying that someone whose voice is nice to read. I didn't say that.
That's why I don't like reading, so you let me read.
Oh, assembly.
Okay. Mercury Company Management wants to prepare a budget for one of its products, Tomacan, for October 2019. The firm sells the product for 75 Ghana cedis per unit and has the following expected sales in units for these months in 2019.
Okay.
July 6,000, August 7,000, September 8,000, October 9,000, November 10,000, and December 11,000. The production process requires 5 kilos of atadri and 3 kilos of ginger. The firm's policy is to maintain an ending finished goods. Inventory each month equals to 15% of the following month's budgeted sales, but in no case less than 30,003 units. Sorry.
Okay.
All material inventories are to be maintained at 10% of the production needs for the next month, but not to exceed 3,000 kilos. The firm expects all inventories at the end of September to be within the guidelines. The purchase department expects the materials to cost 1.75 Ghana cedis per kilo and 5 Ghana cedis per kilo for ginger and atadri respectively. The production process requires direct labor at 2 The production process requires direct labor at 2 skill levels. That is the skilled and the non-skilled. The rate for labor at SLI is 1 is 45 per hour, and for SL2 is 25 per hour. SL1 can process 1 batch of Tomacan per hour, whilst SL2 uses double the time of SL1 for the same output. Each batch consists of 10 units. Variable manufacturing overhead is 100 Ghana cedis per batch plus 75 per direct labor hours. Fixed production overhead is 51,240 Ghana cedis. It is the plan of Mercury Company to spend a third of variable and fixed production overhead costs on selling and administrative expenses. The company is in the 25% tax bracket, but enjoys a rebate of 50% because of its location. The company uses an actual cost system. The unit cost of production is in October is the same as that of September. Required. On the basis of the preceding data and projection, prepare the following budgets. Production budget for October in units. Direct materials purchases budget for October in kilos. Direct materials purchases budget for October in cedis. Direct manufacturing labor budget for October in cedis. Thank you.
You're welcome. Thank you very much. Okay. Were we asked to prepare sales budgets? No. There's no sales budget. Assembly. Okay. So let's take the question again. The production process requires 5 kilos.
We are giving values for sales.
Yeah, but we are not asked to prepare the sales budget. So you can see that the 75 cities over there is nothing. The production process requires 5 kilos of atadri and 3 kilos of ginger. The firm policy is to maintain an ending finished goods. So that means 1 unit requires how many kilos of atadri?
5 kilos.
And how many units of ginger?
3 kilos.
Okay. The firm's policy is to maintain an ending finished goods. Finished goods means that this is production aspect they are talking about. Are you okay? Okay. Ending finished goods. The first policy is to maintain an ending finished goods inventory each month equal to 15% of the following month's budgeted what? Sales. So it's the same as what we did, isn't it? So if you want to know, ending finished goods is closing stock. Any finished goods is closing stock, isn't it?
Yes.
So if you want to know the closing stock for this month, you find 15% for the following month sales. Are you okay?
Where is the sales?
The sales are the thing given at the top here. Is a July and
Okay,
things
so we
over here.
multiply.
July
Yeah.
to December.
Okay. Are you okay? On the following month budgeted sales, but in no case less than 1,300 units. So even if it is 1,000, if it is less than 1,300 units, add it
Pick
up.
1,300.
Add it
Okay.
up to make 1,300 units. All material inventories are to be maintained at 10% of the production needs for the next months. All material inventories. This one they are talking about was raw material, the kilo and then the atadre and then the ginger. All material inventories are to be maintained at 10% of the production needs for the next month.
Month.
So this one, what are you going to do? Which of the months are you finding the percentage for?
The following month or the current month, but you are using the following month or
No. All material inventories are to be maintained at 10% of the production needs for the next month.
next month.
So if it's
So
July, then maybe it's for
use the
August.
production requirement of November to determine that.
Of December.
Exactly. So
November.
it is the closing stock will now be the 10% on the month's stock, on the month's usage. That will give you the closing stock. The question
Linus,
is,
please take it again.
all material inventories are to be maintained at 10% of the production needs for the next month. So if you are producing
for the next month,
yeah, so if it means that
you have to get the next month's percentage and maintain it for this month. Is that what you are saying?
No, I will come again. All material inventories are to be maintained at 10% of the production needs for the what?
Next month.
Next month.
So
if can I come in?
Yeah.
Okay. So if sorry, all material inventories are to be maintained at 10% of the production needs for the next month. So the meaning is that all material inventories are to be maintained at 10% of the production needs for the next month, but not to exceed 3,000 kilos.
So don't you think you need next
The
month
payment to be within the guidelines? I'm coming. All production
We're not talking about the closing stock.
Yeah, this is closing stock. All material inventories are to be maintained at 10% of the production needs
for the next month.
So what the meaning is that if you are to use 10,000 this month, you have to take 10% of the 10,000 and for an anticipation in next month. That is what they are saying. So
no, Linus, I don't think that is it.
No, that is what I understand about it is that
you need 10% of December and keep it in November for December.
Exactly. 10% of the production requirements of the
For the
following
next
month.
all material
I don't think
inventories
so.
are to
No.
let me come. All material
It's just
inventories
like
are to
the
be
first one
maintained.
that we do.
All material inventories are to be maintained at 10% of the production needs for the next month.
So
Okay,
yeah, they didn't
okay,
mention about
okay,
anything.
okay. It's 10. So if you are
10% of December to be kept in November.
okay,
Exactly.
all material.
Yeah, they
I'm
didn't
coming.
mention any month or
All
No,
material,
I'm just
all
giving an
material
example.
inventories are to be maintained at 10% of the production needs for
The
the
next
next
month
month. So if the next
Yes.
month is 11,000, you keep 10% for this year, this month, and
in
you send it
November.
there.
Yes.
Okay, I'm coming. Let me take it again. This is English. All material inventories are to be maintained at 10% of the production needs for the next month. So if you take 10%,
Simply means that 10% of
Please,
the
those
next
who did
month
literature.
becomes the
all
closing.
material
this is how
inventories are
ICA
to be
fail
maintained.
people.
10%.
Just with English.
All
And
material
continue.
inventories
Who
are to
did
be
literature?
maintained.
Production of the
Come
next
on.
month becomes the close of the previous month.
Richard, you are making my mind confused. Let me come
Yeah,
back.
please, is this a past question?
All
Hello,
material.
Efo.
Yeah.
You see, let's just
Sir,
take
is
it
this a past
simple like
question?
this.
All
Every
material.
month will have its production requirements.
Okay.
That is the quantities of raw materials required to meet the finished goods.
So what if
So
you
in order
what
to get the inventory for a particular month, you work 10% of the next month that will follow that month.
what if you
And
keep
keep it as
what if you
inventory.
keep 10% of this year's one to the next year? What if you say, okay, I don't know what will happen next month, so let me keep 10% of what I produce over here to the next month. What if you do
Hey,
something
bro.
like that?
No, that is not what they are saying.
Okay, let's assume that it is next month. Okay, let's move
10%
on.
of the production
Production needs
requirements
for the next month.
for the next month.
Okay. I've gotten it. 10% of the
Please,
production
is it a
needs for the
past
next.
question?
I can't tell. All the
So that we
materials
look for
inventory
it
have
and
to
we
be
stop
maintained to.
this.
Okay, of
Literature is
10% of the production needs for the next.
Yeah, it's a
Of,
past question.
so this will be
it's a
of.
past question, eh?
Okay,
Yes.
the of over here means next month. Okay, 10% of the
Yes.
production needs off. Okay, off.
Exactly.
Next
Exactly.
Okay,
month.
let's move on. Let's move on.
But that one should not exceed 3,000.
3,000. Okay.
Yeah.
For instance, in
Okay.
case if you get 3,500, you take the 5 off and maintain only 3,000.
Okay. So the firm expects all inventories at the end of September to be within the guidelines. The purchase department expects the material to cost 1.75 per kilo and 5 cedis per kilo for ginger and atadwe respectively. The production process requires direct labor at 2 skill levels. The rate for labor at the skill level 1 is 45 per hour, and for skill level 2 is 25 per hour. Skill level 1 can process 1 batch of tom can per hour, while skill level 2 uses double time of the double time is what, 2 hours, isn't it? Okay, for the same output. Each batch consists of what? 10 units. So if you want to know they are producing one batch of tom per hour. So 1 batch is per hour, isn't it? Okay. So if you are to do for July, how many batches will you have in July? 10 units is in a batch, and you are producing 6,000. How many batches will you have for July?
600.
600 batches. Okay. Okay. Let's move on. Variable. Are we asked to calculate the variable? Okay, let's just limit ourselves to what they're asking us. Production budget for October. Let's look at production budget for October. Okay. Production budget for October. What are we starting with?
The unit.
We start with what? Production budget will always start with what? The sales. Okay. For October.
Yeah, 9,000.
Okay. We are doing this for only October. So we start with the sales.
Yeah.
The sales is what? What is the sales unit?
9,000 units.
9,000 units for October. 9,000 units for October. Okay, there is issue about closing and opening stock, isn't it? Let's look at the closing stock for October. What will be the closing stock for October? It is 10% for November, right?
Mm-hmm.
Okay. 10% for 10% for November. What is that figure? Is it 15 or 10?
15% for
Okay.
finished goods,
Okay.
10% for raw materials.
Okay, 15% for finished goods. Inventory each month equal to 15% of the following month's budgeted sales. Okay.
For the sales.
So that would be 15% of what?
10,000.
10,000.
And that will give us what? 1,500.
1,500.
What will be the opening stock?
It should be 15% of October.
What will be the opening stock? In September, the closing stock of the 15% of 9,000 was the closing stock for what? October, September, isn't it?
Yeah.
So it means that 15% will now become an opening stock for what? October.
Mhm.
Okay. So look, fine, do that. Let's see. So let me put it over here. Let me just define it. 15%, 0.15 times 10,000. What are we getting? 0.15 times 9,000. What are we getting?
Yeah.
What figure are we getting?
1350.
1350. What will be the what quantity do we have to produce now? What quantity do you have to produce? We want to sell 9,000 and still have 1,005 in stock, but we already have 1,350. So what? How many quantities?
9,150.
9,000.
150.
9,150. Someone should confirm.
Linus, why are you keeping 15%, 15%?
What is the question? What did the question say? Read the question again.
The first one is 15% of the following month's budgeted sales.
Okay.
And then the other one is 10%.
The 10% is for inventory, is for raw materials.
We haven't gotten there yet.
The 10% is for raw material.
Yeah, I get it too.
Okay. Inventory of materials. That means raw material.
Inventory each month equals to 15% of the following month's budgeted sales.
Okay. So we are doing this for October. So the closing stock for October. The closing stock for October will be 15% of November. Read the top there again. They say
the production process. Okay, no, not that one. The firm policy is to maintain an ending finished goods. That's the closing inventory.
Finished goods is the production, is the actual unit. Yeah, okay.
Final goods.
So the inventory each month equal to
15% of the following month's budgeted sales.
Okay. So the ending finished goods is 15% of the following month budgeted sales. So we are doing the budget for only October. So what will be the closing stock for October? Kathy, the question is for you.
Please, again.
We are doing the budget for what? October.
So we'll take 15% of November.
Okay, and that is how much?
Okay. 1,005.
Okay. In September, the closing stock was 15% of October, isn't it?
Okay, sir.
Then that will become an opening stock in October.
We are using that for now.
Are you okay?
So it will become 15.
Yes, because in September, 15% of October was closing stock for September. So that 15% will now become
the opening
stock for October. Are you okay?
Okay.
Okay. The next budget
So
is what?
that one, I thought you said then that one would be 15% of 8,000. Since that one is there.
Not 8,000. 8,000 from where? September was for August. September was for August closing stock. So in September, that particular closing stock for August will now become opening stock in September. In September, 15% of 9,000 was closing stock for September. In October, that closing stock became opening stock for October. 50% of 10,000 was closing stock for October. That particular will become opening stock in November. 15% of 11,000 was closing stock for November. That will become opening stock in December. Joycelyn, do you have something to say again?
I am following.
Okay. The people are gone. Plenty people are gone. They have to go. Okay.
Why are you saying that?
Okay.
They are not following.
Direct materials purchases budget for October. So what will be the direct material purchases for October? Direct material purchases are based on what? Production budget, isn't it? Direct material purchases for October. Direct material purchases for October. Okay. So we have to do it for all the two. Atajua and what? Atajua and what?
Ginger.
Ginger. Okay. Okay. How many quantity are we producing? How many quantity are we producing?
9,150.
9,150. For this will all be the 9,150 for all. What is the material usage? What is the material usage for all of them? Each of them. Material usage is what?
5 kilos for Ataje.
5 kilo for what? Atajua. And
Then 3 kilos for Ginger.
Okay, 3 kilo for. Let me add a kilo. Kilo. And 3 kilo for what? 3 kilo for this one. So what will be the total material that we are going to use? What will be the total usage?
For Ataje will be 45,000.
45,000.
750.
850.
750.
Okay,
750.
750. Okay. This is what?
27,450.
20.
27,450.
27.
450.
450. Okay. What is the policy on this? What is the policy on this? That is the material that we are going to buy. That is the material usage. But the question says what? The question says what? All material inventories are to be maintained at 10% of the production needs for the next month. What? But not to exceed what? 3,000 kilos. So what do we have to do? We have to know the material usage for December, isn't it?
Yes.
So that we can find 10% for that particular usage. So production needs, all material inventories are to be maintained at 10% of the production needs for the next month, but not to exceed 3,000 kilos. Okay. The firm expects all inventories at the end of the September to be within the guidelines. Okay. So let's come and do something for December. Let's do workings for December. That will be November, not December, November. Let's do some small working for November here.
Linus, the first one we did is for finished good.
Is for finished goods. We are now doing the raw material.
The material, okay.
Okay. Are we okay? So
Yeah, I'm okay.
10% of the next month, which is November. So we have to know the material usage for November. Then we find the the cost. Okay, well, how much are we selling in November? How much are we selling in November?
In November,
Yeah, 10,000.
10,000.
Okay. What will be the opening stock here? What will be the closing stock here?
15% of December.
That will give us what?
5,500.
5,500. What will be the opening stock?
It will be
No.
15%.
It's 1650.
That is the closing stock, 1650. Okay. What will be the opening stock?
Yeah.
Opening stock is 1,500, isn't it?
Really a closing for this. Yes, 1,500.
Okay.
Please hold on.
So how much are we producing?
Okay.
How much are we producing?
10,150.
10,150. So Atajo will be how many? Atajo will be 5 kilo, isn't it?
Yes, please.
And that one will also be what? 5 what? It will be 3 kilo, isn't it? What will be the kilo for all of them? What will be the total usage? So these are the usage, isn't it? Okay. So let's come here. So if you want to go and buy, what you have is that you are going to have some closing stock, as the question says. So the closing stock will be 10% of what? Closing stock will be 10% of what?
That of November.
Which is 50,
The
70
next
for,
month,
which is 50, 70 for Atajo, isn't it?
No.
And also 10%, which is,
3450.
and also 10% of 3450. That will be for ginger. How much are we getting?
The first one will be 57.5.
57.5. Okay.
This
The,
one should go.
the next one is what? 34.5.
Yeah.
Okay. What will be the opening stock? The opening stock will be that of what? October itself, isn't it?
yeah,
Okay.
10,000. 15%
no,
of
9,000.
No, it's 10%. It's not 15.
10% of 9,000.
No, it's usage. Oh. This one we are looking at usage. Oh.
Okay, you said, yeah.
The usage is 4575027.
Yeah.
So this will be 4575
75.
2745. Okay. So what
This
is it?
people are commitment.
Sir, but they are telling us not to exceed 3,000.
Well, let me see the question.
Yes.
I should not
Yes,
exceed
right there.
3,000.
For the next month, but not to exceed. Okay. So this will be
3,000.
3,000.
this will be
And this
3,000.
will be 3,000.
This one also be what? 3,000.
3,000.
And this will be 3,000. So we maintain this one. Hey, assembly.
How many questions are we supposed to answer? 5 within 3 hours.
One question and you are using this question could be like 10 marks.
What? Hey, before you think and reason, then you've spent 20 minutes already.
So 45750. This is the material over here. What will be for this one? The second one. It is the same. It is the same as the usage plus closing minus opening.
Yeah.
What will be for this one? So me my mind is not even on that one. Oh. So that I'll come out and be saying that I killed the paper.
When the paper kill you.
Long time. Okay, so this is the material that we are going to purchase now. Assembly. But it's too much, it's too much.
Ah, Emmy.
So this is the material purchase, isn't it? One material is costing how much? How much is one material?
1.75 per kilo and then 5 per kilo for ginger and atadwe.
So this will be C. So for the C, we just come and take the material purchases. Atadwe is what?
Atadwe is 5
Okay, ginger
per
is
kilo. 1.75.
Is it the amount?
here is the amount.
So why are we using the kilos?
It's per kilo.
That's the price per kilo.
Okay.
So we have 45750 and 27705. So cost is what? Cost per kilo is what? 1.75.
5, yes.
And ginger is
5.
5. So we just multiply the two. What are we having?
No, if we don't follow the arrangement very well, atadwe is 5, ginger is 1.75.
Atadwe is 5.
Look at the arrangements.
Assembly.
1.75 for ginger, atadwe 5.
Okay, let me see.
The ginger is the
The
1.75.
purchase department expect the material to
Exactly.
cost
And atadwe 5.
1.75 per one per. Let me count. The purchase department expect the materials to cost 1.75 per kilo and 5 cents per kilo for ginger. So ginger comes first.
Yes. Yes.
Ginger, okay, so ginger should be 1.75. Okay.
This one there, if you go, you say, oh, this I've killed the paper.
Okay.
Linus, you've killed the paper.
I've made the paper.
Hmm.
Okay, it's because I'm using the Excel together with the paper will be in front of me, so I'll kill it. Maybe I will see those things.
Yummy.
Okay, so we are done with the material purchase and budget. We are done with the first three. Let's come to the direct manufacturing labor budget for October now. Assembly.
Is it 20 marks?
I don't know. Okay, let's read the information on the labor. The production process requires direct labor at 2 skill levels. Okay, the rate for labor at 1 is 45 per hour, and for 2 is 25 per hour. S1 can process 1 batch of what? Tom can per hour, while SL2 uses double the time of S1. So S1 is 1 hour per what? Batch, and S2 is what? 2 hours per batch, isn't it? For the same output. Each batch consists of what? 10 units. How many quantity are we producing for October?
9150.
Okay. So they are saying
divided by 10.
divided by 10. What are you going to get?
Get the units.
915.
915. That will be the number of batch that we are going to have, isn't it? Okay.
Yes.
Okay, let's come here. What is it? Let's see the next one. Variable manufacturing overhead per batch. We are not asked about anything about variable manufacturing overhead, isn't it? So let's focus on the labor here. Okay. So the rates labor can process 1 batch of
Tomacan per
hour. So how many batch do we have over here?
915.
For the total, isn't it?
Yes.
Okay.
Yes.
So 1 batch is how much?
1 hour.
1 batch is how many hours? 1 batch is how many hours? Let me put the labor direct manufacturing labor overhead here. Let me do it so that we can get it one. Let me arrange it once. Okay. So this one we need to find the batch. So what is the production unit? How many are we producing? What is the
I think 1959.
production unit is 9150, isn't it?
Yeah.
9150. But we have 10 units in batch. So unit in batch is what?
950 divided by 10.
So total number of batch will be what? 915.
915.
Okay. Let's do it like this and let's move on. So what is the hour per batch? How many hours per batch are they using?
One. You said 1 hour.
One for skill, isn't it? So let me
Yes.
come here and see. Let me put skilled here. SL1 and SL what?
Sure.
SL2. Hey, almost everything. Hold on. You see ya? I still a teacher. Can we move on?
Yes, sir.
Okay, number of badges what? Number of
They
badges
can
what?
produce 10
Number of
10
badges
units.
915, isn't it?
Yes.
915. So hours per badge is what?
1 hour.
One for this one, two for this
and
one.
This one is
So how many hours are they going to use it all?
915.
Mhm.
And then this one multiplied by 2.
And that will give us how much?
1830.
1830. And what is the
Yes.
rate per badge? What is the rate per hour?
5.
45.
45 for what?
45 for L1 and
Mhm.
25 for
For
L2.
L2.
So we just multiply this. That is all.
The thing, if you understand, is easy.
I mean, because you can understand, but you go there, like it will be some way. But don't worry, let's just pray for the best. You need critical understanding. You need to, like, you have to be fast in thinking. That's what I have to say. And if you practice more, too can also help you. So number of badges what? 915, 915, isn't it?
Yeah.
Skill one is using 1 hour. So they are going to use 9 and 15 hours. But 1 hour is what? 45. So
Yeah.
they have to multiply to get a total cost for that one. They are all, this L2 is also 915 batch, but 2 hours per batch. So they are going to spend 1,030 hours. 1 hour is 25, then you multiply. Are we okay?
Yeah.
What question number is this one?
The last one, D.
No. The question number itself. Is it 14?
14, yeah.
Okay, let me name it question
So the
14.
last paragraph there, they just brought it to confuse you.
I'm sure that there will be
14, yeah,
something.
14.
There is something, but I'll leave it. There might be something over there, but I'll leave it. Me, my focus was on only the this thing. The production budget, yes, the production budget. There might be something over there, but maybe I've left it or something. Okay. So can we do something about budget? Can we prepare production budget?
Yeah, we'll go over.
So we look at cash
You're
budget.
answering the complex one again.
Okay, this one guys is 9 something. It's 7 going to 8. Let me see whether we can go to another one again. If I have a question, and this is cash budget. This is
Therefore,
yeah.
will one be wrong if you refer to direct manufacturing labor budget to include the variable manufacturing overhead?
Let me come.
Because it's also direct.
Let me see the question. No, since they say direct manufacturing labor budget. So since they say labor, you limit it to only labor.
Okay.
The question said direct
But I will say
manufacturing labor.
direct manufacturing overhead budget.
Then you add the variable overhead also to it.
Okay. All right. Okay.
Okay. There's another one to, let me see, production budget. Sometimes you can have a production budget where they are going to say that there will be some losses that will incur during the production process. Don't worry, next week.
Yeah, normal loss and
Yeah,
abnormal
so
loss.
if they say direct labor, if they say direct, if they say the manufacturing cost of it, then you add a fixed production overhead, eh?
Yes, if they say manufacturing
Cost.
manufacturing cost, then
Cost of the item.
then you add the direct material to direct labor, direct
Labor.
overhead, then the fixed cost too. They are all manufacturing costs. Okay.
So you add the material, the labor, the variable
And then the fixed.
overheads, and then the fixed. Then we
They're
get
all-
the cost.
Yes, they're all manufacturing costs.
And now
All
they
the
bought
elements, of course.
Okay, next, you see sometimes the production process, they will say that, okay, during the production, there will be a loss. Some of the products will go bad and maybe 10%. So we look at how to go about that one next week.
Okay.
I don't want to duplicate things.
Okay.
But
We'll
at-
go and practice this
But
one.
at this level, we can say that we can prepare sales budget, isn't it? All things being equal,
Yeah.
both in value and unit, isn't it?
Yes.
We can prepare production budgets. Production budget, you have to take care of whether there are going to be some closing stock and some opening stock. You have to always look for that. Material budget is based on production that actual production that you are going to do. Labor budget is based on production.
Linus, which one is the sales budget?
Oh, but we have done sales budgets where they will
Not the
say,
first one.
yeah, the company want to sell something, then you find the unit and multiply by the selling price.
Yeah.
Yeah, that's what I'm saying.
Okay.
All right. So at this time, I'll just say that my sisters, my brothers,
Hmm.
the day has been stressful.
Mm.
Okay. So,
Thank you
very much.
okay, you're welcome.
Thank you, Linus.
Some people, hi,
Linus, did you drop your number?
you people, why should you be calling my name is not a common now.
So what's your name?
My name is a proper now, so you shouldn't be calling my name anyhow like that.